Hey everyone, we got some massive news for Lucid stock investors, and in this video I'll go through that latest development and what it could mean for Lucid stock investors. So without further ado, let's jump right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Lucid interim CFO saying that in 2023 they made headway with their cost optimization programs, the key strategic priority for the company. We found success in areas including freight, logistics, overhead, and bill of materials. That's great news for Lucid stock investors, although I'm sure Lucid stock investors were looking for more progress given how much money the company is losing on the bottom line. And we'll take a look at that in this video too. But it's good that they're making progress, but investors would like to see more of this progress here to at least close the gap a little bit from those losses on the bottom line. From an inventory perspective, we drew down raw material inventory levels in the high teens percentage from the start of Q4 through material planning and inventory management improvements. Solid again, to be sure. The company is iterating its process, getting better at doing what it does, and reducing waste, thereby increasing the gap between what it needs and what it buys. So we also experienced a significant reduction in freight from more efficient transportation and storage planning. We have identified additional opportunities in cost of goods sold as well as operating expenses that we will look to operationalize over the course of 2024. In other words, the CFO saying, look, we made progress in cost savings in 2023. Here are the areas we made progress, and in 2024, we see additional opportunity to reduce our cost of goods sold. That's critical. That's critical for Lucid because it's, again, losing so much money. It's critical for the company to bring down that gap between what it costs them to make a car and what they're selling the car. Right now, it costs them significantly more to make a car than what they're selling it for. They need to reverse that equation in order to be a sustainable business. You can't continue selling cars for much less than what it costs you to build them. And already Lucid's cars are expensive, and they're actually been lowering their prices to make their cars more competitive with other cars in the market today. So the improvement has to come from the cost side because there is little wiggle room on the price side given the EV price wars started in late 2022. So a lot of pressure on the company to improve on that side of the equation. Overall, they produced 8,428 vehicles in 2023. That was up 17% year over year and on the higher end of their guidance of between 8,000 and 8,500. But remember, that guidance of 8,000 and 8,500, that was the second drop, right? Initially, they had forecasted a production target of 12,000 for the year. And when they saw that customer demand wasn't going to justify making that many cars, you don't want to make cars that are going to sit around and not sell. So they lowered that to 10,000 from 12,000. And again, they noticed that was going to be too much. They didn't have buyers for those. So they reduced it even further to between 8 and 8,500. And that was the sweet spot. That's where they ended up saying it's the right number to produce. In 2023, they delivered 6,000 vehicles. That was up 37% year over year. They expected to deliver more in Saudi Arabia in the fourth quarter, but as they mentioned in the last quarter, the ramp up was taking longer than they expected. However, they believe they now have the right infrastructure and processes built out to deliver those vehicles. This isn't unique to Lucid. If you've been watching my videos on another EV company, Fisker, they had a lot of difficulty in taking cars from production to customer, just from where the car is produced to where the customer is located. When you're a company that's got a direct to customer sales channel, right? You don't have dealerships. Typically, these legacy automakers have dealerships. That's where customers go to get their vehicles. But what if you don't have dealerships? How are you going to get your car to the customer, right? And that's a challenge because, yes, you can get someone to deliver that car to each customer that buys it, but that proves to be expensive to take delivery one at a time, one customer from production to one customer. So that's the challenge they had for Saudi Arabia. They believe they now have the right infrastructure processes built out to solve that challenge. So that was not unique to Lucid, but it's good to see that they corrected the issue. So here's what I was talking about earlier about the difference between cost and sales. For the fourth quarter, revenue was 157 million, but the cost of revenue was 410 million. 157 million, but the cost was 410. More than double what your revenue was. More than double what your revenue was. That's not a sustainable equation. And so you've got to improve on that equation if you want to be around for the long term. You can't keep raising money from investors because investors aren't just going to keep giving you money for you to lose that money, right? No matter how much money the major supporter of Lucid is, right? It's been no secret that the Saudi Arabian government has been a major supporter, investor of Lucid as a company and as a shareholder. And as a customer, they've ordered thousands of the vehicles as well. They're not just going to keep dumping billions of dollars into Lucid unless Lucid demonstrates progress on this front, right? No matter how much money you don't have infinite amounts of money. And so if you're going negative, you keep putting in billions and it keeps going negative, eventually you're going to stop that. It's not an infinite support here. It's, yes, they have deep pockets, but they're not going to infinitely support Lucid. So it's important that they get this equation on sustainable footing. And we saw earlier that they did make improvements in 2023 and they've got more lined up for 2024. That's going to be critical for the company. Management says that as we ramp up production, we expect the overhead per vehicle to improve. The difficulty is that they're not ramping up production fast enough. The forecast for 2024 is again for very modest growth, and that's not going to make a meaningful dent into the losses on the bottom line because it's not at a large enough ramp to make that improvement. That being said, 2025 is shaping to be a much better year for Lucid. 2024, it's going to be about more of the same. 2025 might be a big step forward because in late 2024, they're introducing the SUV, the Gravity SUV, at a price point less than $80,000. So I think demand for that product is going to be higher than demand for its I'm forgetting the word for it, sedans, sorry. And that's going to drive significant increase in production numbers and sales. I'm estimating their sales, their production could double in 2025 from where they were in 2023. So nearly 17,000 units in 2025, given the incremental production coming from the SUV. So that's something that Lucid stock investors can look forward to. Still, it's difficult to sustain a business when you're losing this much money on each sale. That's primarily why Lucid stock price has been so challenged, because they're not on sustainable footing and they're not growing very quickly either. And so they've got to get that ship right, and they're making progress, and hopefully investors see more progress from Lucid in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.